Good morning, ARMR Insiders. Welcome to the morning meeting of the Virtual Hedge Fund. You're a portfolio manager on the desk. Grab a pen, piece of paper, get yourself ready for the trading session, figure out your risk tolerance goals, and then execute. I'm going to share information about how I'm running my own portfolio and portfolios that I manage, and then take that information, make it your own. So let's dive into the macro picture, risk monitor, what's happening today market-wise, what matters. We're going to dive into couple of top stocks to watch that might be off your radar that I think probably should be on the radar. So we'll go over that. We listened to a conference call yesterday that kind of raised the thought to the top of our minds, along with the ARMR algos giving us entry points. So top stocks to watch, stocks to buy. We're going to talk about an interesting phenomenon that's unfolding this week. It's only been 3 days. I get it. Maybe over the last couple of weeks, it's starting to unfold over the last week or so. So it's very early and it may mean nothing, but I want you to watch the four horsemen of the apocalypse. If these four assets all go up at the same time, that is only indicative of a risk-off trade that's gaining steam. So you've got to watch them, and we're going to go over them in a second. So let's break this day down. Step one, risk monitors red. Big announcement tonight, Nvidia. It affects everything. I put it into the captain's log for you, just taking what IBD is talking about. All the companies from AVGO to Marvell to Google and Amazon to, probably Palantir and, some of the smaller names, they're all driven by what happens with Nvidia. I think 7 analysts have fallen all over themselves in the last couple of days to upgrade the stock, to raise their guidance, to raise their price targets. And so my question really is, what's the reaction to the news tonight? I mean, I would say, obviously, we all know if they miss the number, it's just death. I don't think they're going to miss the number. I think all the analysts are falling all over each other because they've done channel checks and they're pretty sure they're going to beat the number. So I'm thoroughly expecting a number beat, and they even may raise guidance. But the question is, what's the reaction to that news? If everybody's already all in, who's the last guy? Where's the marginal dollar that's going to drive this thing up another 30%? I don't know where it comes from. What created that massive explosion last quarter is that it caught people off guard. And then after the story hit, all the analysts came out, upgraded, raised their guidance and all that kind of stuff. So now what the analysts are doing are falling all over themselves to get ahead of the print. And I don't know. If you were to say, Brett, could you come up with a guess of what's going to happen? Sure. They're going to beat the number, raise guidance, market, and the stock will be up 10+% in the aftermarket when the news hits. And by the end of the day tomorrow, the stock may be lower. People will just sell on that news. Now, if the risk monitor was green and the Fed was adding liquidity, I wouldn't say that. I'd say another gap and go, another gap and run. Money's coming into the market. Everything looks great, and the leader in the market is, blowing out the numbers again. But God forbid they don't ratchet up their guidance again. And they've been ratcheting up the guidance in between the quarterly announcements, so everybody knows what the guidance is. So what could they possibly say this quarter that would drive it higher? I don't know, but I know I'm not going to be in there gambling. That's not what I do. I'm totally content to let this play out. And by the end of the week, if we have a new risk on green signal, I'll put capital to work. And I may not get Nvidia, and I may not get, ServiceNow or Adobe. I don't care. There'll be something else coming off the whiteboard that I want to own. So now's the time to work on the whiteboard. Now's the time to go back over the last swing cycle and ask yourself, did I maximize my returns? Where do I want to focus on the next swing cycle? For me, without a doubt, I want more exposure to the risk monitor green signal, which means I need more exposure to indexes. And I'm going to be using double or triple the indexes to get that exposure. I also want less individual names and larger positions. Okay, I don't want to carry so many names. I really want just 10 names. 15 would be max. 10 would be ideal. High grade our entry points. Only go with the best names, the bigger position sizes. And the biggest reason for that is that slippage, execution risk is a real tax on a portfolio you just don't need. So if you're running more than 10 positions, even 10 is hard to run, but you're running more than 10 positions and you have to scramble to get out of them, stops are getting hit, the market's rolling over, whatever, you're losing more money. You're being taxed for no reason because you're simply having to run out there and try to execute way too many trades. So there's risks and rewards to everything. Someone says, well, geez, if I only have 5 or 10 stocks, then I've got, too much risk in any individual one name. True, although your reward is commensurate, right? So bigger position sizes, when you get it right, you really get paid. So the risk reward is kind of even there, but it's easier to manage the portfolio. There's no tax there. So that's really, the tweaks that I'm going to be making when it comes to running money. So now let's dive into top of the whiteboard. We were watching yesterday. We were running through this earnings report yesterday. We listened to the conference call. We have a risk on entry point in Moderna. Okay, these are the COVID stocks. So going all the way back to here, this was the initial rip higher in the COVID story, and then the absolute skyrocket, right? It's completely unwound all of that, Moderna. It's unwound all of that. And now we have a risk on entry point as of yesterday in Moderna. As you could see, it's a break below the support and then an immediate recapture. That's usually very bullish, okay? Because what you did was you just trapped a bunch of people. I don't know who they are, shorts or whatever, or the last guy who couldn't stand it anymore dumped his stock, and now he's out, and a whole new trend is beginning. We have a risk on entry point following the ARMR algos. BNTX is actually breaking out ahead of Moderna by about a day. It broke out first and Moderna just followed. Okay. But let me go over this, real quick for you. First of all, this is not about fear mongering. I don't know if we're going to have a nasty COVID season or not, but I'm going to fall on the side of that's not what's going on here. Okay, we're going to have a COVID season, whatever, and there's going to be a bunch of advertisements to, for people for boosters and all that kind of stuff. And let's not get into a debate on whether or not boosters work and this, that, and the other thing. Moderna came out with a booster that has high efficacy against whatever the new variants are, right? And there's going to be a certain faction of the country that will be continuing to get their booster shots, just like people get flu shots. Okay, so this is not a debate about COVID or any of those things. This is just about Moderna as an investable company. Moderna, and to a different extent, BNTX, but let's talk about Moderna. This was a great story before COVID ever hit. This is a unique way to create vaccines to attack all kinds of disease, okay? I did research on this company when it was a $20 stock, and COVID, nobody even knew what COVID was. It's like, this is a crazy idea. There's great technology in this company. Okay, normally it would take them 5 years, 10 years, and a series of capital raises that dilute shareholders to get to the point of proving through the FDA channels the success of their new strategy for vaccines. What happened with COVID is that it accelerated everything. They got funded by the government. They didn't have to dilute any shareholders, and they got $14 billion of cash sitting on the balance sheet now. And they're using that cash to advance into phase 3 trials, vaccines for things like cancer. So now we can debate all day long the merits of a vaccine for a cold, right? And then, so the vaccine has side effects. Do you want to take it for COVID? We could debate that all day long, but I don't think there's any debate. The company's proven what the side effects are. Let's don't debate what they are. Okay, we all know the arguments, right? But whatever they are, if somebody had cancer, they would accept whatever the vaccine side effects are if it helps cure cancer. That's a no-brainer. So they've reinvested this cash hoard into advancing their platform. And 2024 is the year of Moderna. If they're able to deliver on the stable of ideas that they're working on, and we have a reason to believe that they'll be able to be successful there, then this entry point coming off of the lows when everybody hates the story and blah, 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 and all this kind of stuff, and analysts are on the call trying to figure out how many people are actually going to get the shot, for the next COVID season. Like, everyone's just focused on the next COVID season. And this company is building something dramatically more valuable than what's going to happen next COVID season. So buying it right off the bottom, to me, that's where you have to be. Because if it pops into the next COVID season, I'm not chasing the stock. Who knows what the numbers are going to be? It seems like conservative guidance right now for the COVID numbers. So maybe they'll hit that guidance. I don't know. But there's such value locked up in this company because of the speed with which they've been able to prove efficacy and side effects so that they can get to the next stage with all of their other vaccines, that I think it's almost possible people have forgotten that. They're just so lost in the screaming that goes on between different factions of people who believe or don't believe in vaccines for COVID. And they're completely missing the fact that what it's done is fast forward the development of some category killer drugs that might come out of this company. So I find it very interesting. BNTX is a profitable company. mRNA has been kind of reinvesting, so they're losing some money, but they're reinvesting aggressively. So one has probably a bit of a better financial profile, and the other has a better, stable for new drugs. I mean, that's where it kind of falls down. They both have the exact same type of chart patterns, and I probably want to own both. Okay. So those are the stocks to watch right now. If the risk monitor was green, I'd already be long these names. I might be long Moderna personally. I'm not putting that in a bunch of portfolios, but I might have it in a portfolio somewhere with my name on it. So those are a couple stocks to watch. Now let's get back to the four horsemen of the apocalypse, and it kind of plays into Moderna and BNTX. Let's pretend that the reason Moderna and BNTX are starting to go up is because money's shoveling into assets that go up when we have a COVID problem. I'm not pushing that narrative, but it's out there, okay? There's another strain. It's going to cause problems. People are afraid of this, that, and the other thing. I don't know if that's the case, but certainly it's a hedge. Owning these two stocks going into COVID season, coming off of the lows like this, seems like a no-brainer hedge. And then we layer in the four horsemen of the apocalypse. These four assets generally don't go up together. And when they go up together, in my experience, it's only because the risk-off trade is gaining steam and market participants are starting to hide. They're looking for shelter in the storm. So far, we've had a risk-off red and a pullback in the market to reasonable levels, and Nvidia comes out tonight, and maybe the whole market gets rescued, and we get another risk-on entry point. Great. Let's set that aside. Let's hope that happens, because I'm an optimist. I hope that happens. But when treasury bonds go up, and the dollar goes up, and gold goes up, and silver goes up, all at the same time, the only time I've seen that is when risk off becomes an aggressive move. So it's only been a couple days. It's only the start this morning, right? The dollar's up this morning about 1/3%. Treasuries are up about 1%, bonds. Gold is up almost 0.5%, and silver's up 1 3/4%. Okay, here's the dollar, and here's treasuries. So the dollar has broken out above this consolidation. This is very bearish for equity markets. At the same time, treasuries are attempting to make a double bottom. I don't know if you call it a double bottom. Let's just say they're attempting to hold the lows of last year. We had a really, really good day trade yesterday on treasuries. I'll show you what we did here on treasuries yesterday. Okay. Okay, so we picked off this trade right here on treasuries. We got long early in the morning. It was like, what was that? Right around 10 o'clock, and rallied right up here. And we booked a profit right near the highs of the day. We captured that whole move yesterday. It was a perfect ARMR ATR indicator setup, which is the ATR high was above the fourth fib up on the day and flatline horizontally. ATR low was stair-stepping higher all day, and it really drove the asset. We had this perfect entry point, breakout above the opening range high. It was classic, really. And then the reversal, actually a volume reversal, which again is classic. The volume green dot right here. I talk about this all the time, so let's just go over how this works. When you have an asset that's running like this was all day, notice there's no green dots on any bar. This is a 3-minute bar chart, okay? Right here, the green dot shows up, which tells us big volume just came in. And normally you get excited about that and think the market's going to go up a lot. The asset will go up a lot. But actually, when it's been running all day and then there's the green dot, it's usually the top of the move. When the stops are run, when the stops are being run, which is what this is, it rallies, and then it gets to the point where whoever's short just capitulates and the stops get run. The move is done. So it takes out the low of that big up bar with a green dot and the rally's over. Now, it doesn't mean that it has to go down a lot. It just goes sideways the rest of the day. The rally's over. So you've made the money you're going to make on that day trade, and now it's over. That trade works all the time, up and down. Normally, a volume reversal signal is what I use to buy an asset on the downside, and it reverses. But here's an ending signal. But I digress. Let's get back to this pattern. So what I'm saying here is the dollar's up. Treasuries had a good up day yesterday, and they're up about 1% this morning. So if they end up holding here and rally off the low, you'll have the dollar up, you'll have treasuries going up, and then what you're going to have is gold and silver going up. So there's physical silver, okay? This is Sprott physical silver, which is up 1 3/4% today. So this is from yesterday's close. All right, that was yesterday's close. We had the ARMR algo buy signal in the white box. We already started buying it here. We added to the position yesterday, and today it's gapping out above the 50-day moving average. Now let's look at Sprott physical gold. We've been building up a gold position before it moved, okay? It hasn't moved yet. There's a double bottom right around the 200-day moving average, and we've been accumulating it inside of that area. It hasn't turned green yet. It's up 0.4% this morning, trading at 1485. What's 1485? So if it closes up here, that will be the green day. Today would be the green day. That'll be the buy day. And I'll finish off the position. I've got 2/3 roughly of my exposure on physical gold and physical silver. And if they close the day up here, and I stress close the day, because these assets are notorious for gapping up and giving it all away. So nothing to do here. We've already bought it earlier. Now they're gapping up. That's great. And that last piece we don't put on unless it's a close in the green box, giving us the final buy trigger, okay? But to get back to this conversation, If you see the dollar up 1/3% and gold up almost 0.5% and silver up almost 2% and treasuries up almost 1%, something dangerous may be afoot. And this will be like 3 or 4 days where this type of behavior is occurring. Normally, when the dollar is going up, as an example, that chart of gold will be breaking down. So the dollar's been going up and gold's been consolidating at the 200-day moving average. That's, you've heard me say in the past, the dollar and gold can go up together. We almost never see it, but we definitely see it when people get concerned. So I'm going to leave you with that note. I don't know what's going on there. It's only a couple of days, but I want you to watch it, because if it continues and the market's breaking down, then what you know is we've entered a more aggressive stage of the risk monitor red. Now, to balance out that concern, we got Nvidia tonight. Maybe it's a great number. Maybe the whole thing ratchets higher again and, risk on by Friday. We don't know. Don't forget, we got Chairman Powell speaking at Jackson Hole on Friday. So this will be a very interesting week. We're going to be focused on our day trading. We're going to be focused on these assets and layer on top of that what's going on in Moderna and BNTX. I don't know, but I'm layering that on with it. So Risk Monitor Red, this is a week to work on the whiteboard and get yourself prepared for the next cycle. But the order of the day is to protect capital right now. I wish you all a wonderful trading session. I can't wait to work with you when the bell rings at 9:30. Everybody have a great day.